Welcome back. After 4 days of powerful up moves, the SGX Nifty this morning is suggesting a flat start but with a positive bias. But in the last 4 days, the Nifty has added more than 600 points. But there are a lot of stocks to navigate through. We are in the midst of the earnings seasons. We'll get to our top 10 list of stocks. But before that, Anuj, on your watch list?
Rima, Larsen has come on my watch list many times. It's a stock which is in a near-term bull market of its own. Now it's very close to 200-day moving average, so it will be interesting to see if it can sort of halt here or continues to move up from here. The space which is in some kind of a bear market now is all these chemical stocks, and in that one of the leading stocks is Atul. I mean, if you see the chart, it's really all over the place, and these are the stocks where every rally is getting sold into. So that will be my second stock. It was down yesterday, of course, but we'll keep an eye on this.
All right, Atul in focus, we'll keep an eye. So for Wipro, Rima, are we getting earnings downgrades?
Yes, but let me start with the Wipro ADR because that gives you a picture of where the stock is likely to open up. Wipro ADR was down 2.5% in trade, though there was a pop in after-hours trading. On the numbers, Q1 was a miss on revenues and margins. Top-line growth at 2.1% is lower than consensus expectations. Very sharp margin decline of 200 basis points. Margin at 15% is record low levels for Wipro this time. And wage hikes too have been pushed forward by the company to 1st of September. That said, the Q2 guidance. Wipro, remember, gives you quarterly guidance as against Infosys, which gives you an annual guidance. The Q2 guidance is healthy at 3 to 5% ahead of expectations. But remember, it includes a contribution of an acquisition called Rising that the company did. The other two positives in the numbers were deal wins strong at $1.1 billion and attrition has moderated for the second consecutive quarter. But the miss was on revenues and margins, and there have been some earnings downgrade. So just talking about Kotak, where they are saying that the stock is more vulnerable than peers in an event of a slowdown, courtesy the additional challenges of turning around a business and enhanced exposure to a discretionary portfolio given the recent acquisitions. They've cut their target price to 410 and EPS estimates by 7 to 10%. So that's about Wipro. The earnings are a clear miss. But let's talk about IndusInd Bank. Abhishek joins us for more on that. Abhishek, numbers look good?
Well, the numbers were really good, Rima. To begin with, it's one of the only banks to see both YOY and quarter-on-quarter growth in their operating profits for 7 quarters in a row. So it's the only bank perhaps this time around to not witness a massive, losses in their treasury portfolio as well. The return ratios are the best in last 10 quarters with ROA at 1.73% and ROE at 13.4%. Gross NPA slight hiccup, but due to the fact that, large part of the restructured book slipped into NPA. So while gross NPA ratio inched up a bit to 2.35 versus 2.27% sequentially, the restructured book declined massively to about 2.1% when compared to 2.6% in the previous quarter. The net interest margin is at 8-quarter high of 4.21%. Both in terms of NII and PAT, they beat our poll. Back to you.
All right, Abhishek, thank you very much for that. IndusInd will be a stock to watch as well. Now, Havells has reported numbers. Vahishta is here for a quick take on what the numbers look like. Vahishta.
Thanks for that. Havells India had released their Q1 FY23 results update yesterday. Well, the revenues grew by 63% year-on-year to 4,230 crores, which was nearly in line with the CNBC-TV18 poll. The revenue growth was led by Lloyd's, which grew by 119%, cables by 48%, lighting by 77%. The electrical consumer durable segment grew by 45%, and the switchgear segment grew by 39%. However, there was a massive hit on the EBITDA, the margins, and the PAT, led by the high RM cost and ad spends. Lloyd's reported the second consecutive quarter of loss of 56 crores, while there was a decline in commodity prices, which led to price volatility, especially in the cables business. The cables margin have come in lower as decline in commodity costs was passed on while holding high cost inventory. However, the company says that renewed construction cycle has supported switchgear sales during the quarter. The EBITDA came in at 361 crores versus the CNBC-TV18 poll of 496 crores, while the margins have fallen to 8.5% versus 13.6% in the same quarter of last year. The CNBC-TV18 poll stood at 11.8%. The PAT grew marginally by 3% during this quarter to 242 crores versus the poll of 341 crores. So some weak numbers for Havells India. Thanks, and back to you.
Vaishta, thanks a lot for that. And Havells had a bit of a decline. after the read-through from Polycab and over the last 2 days. But over the last 1 month, it's seen a big rally. So it will be interesting to see how that stock reacts. Let's go across to Ekta then. Ekta, Gland Pharma's numbers didn't look good.
Absolutely, Anuj. It was a complete disappointment which Gland Pharma reported. Revenue was down 26%. Street was anticipating a 5% decline. Margins, however, were maintained at 31.5%. So that was probably just the positive which came through. And profit of 229 crores. Street was anticipating around 280 crores this quarter. Now, the numbers were impacted because of a multitude of factors. For example, in COVID-19 related sales were not there this quarter. They sold a large amount of remdesivir as well as enoxaparin same time last year because of when there was a wave 2, supply disruptions. Plus, the company shut down 2 of its manufacturing lines to increase productivity. For example, they shut down an insulin line in India. There was a US price pressure as well as inflationary environment which weighed. So US was down 4% year on year, but they maintained sales and grew it by 6% Q on Q because one of their products which did well. However, the company has indicated that market demand is strong. So that's possibly going to be something which will probably support the stock, that supply disruptions will be transient as well in nature. Jefferies has written exactly that. They say demand is not a factor of concern. Supply chains are transient. Supply challenges rather. They've maintained a buy with a target price of 2916. Remember, stock has corrected over 40% from its 52-week high as well. So maybe a large part of the bad news could have also been factored in.
All right, Ekta, thank you very much for that. Now, AU Small Finance Bank first quarter updates are also out. Abhishek is here with more details. Abhishek.
Well, Prashant, to begin with, the earnings are below pole given the fact that net interest margin is at 5-quarter low. So our exclusive has also been confirmed that, they have taken a board approval for fundraising of not more than 3,000 crores. Slippages were elevated. It increased to 253 crore in this quarter, which compares to 195 crore in the previous quarter. Asset quality largely stable on account of robust denominator factor that the loan growth has taken place. So gross NPA ratio was at 1.96 versus 1.98 in the previous quarter. Net interest margin is at 5-quarter low at 5.9%. Over here, the robust business growth is also hurting in terms of the cost of borrowing that they are doing. So in PNL, the PAT is below our pole. Amongst brokerages, Nomura has upgraded the stock to buy from neutral. They have, however, declined the target price by 25 rupees to about 675 per share. On account of valuation comfort, they have done this re-rating. Back to you.
Okay, they say that the stock is corrected by nearly 20% over the last 3 months, and that's brought the valuation back to comfort level. That's the view of Nomura on AU Small Finance Bank. Tata Communications is the other one on our radar. The company has reported a steady revenue growth. Revenue growth has come in at 1.2%, though the data business growth was a bit subdued. Margins have expanded by 50 basis points to 25%, and there is a big jump in the profitability. Profits have gone up by 49%, courtesy a write-back of a tax expense. So that's driving the profit number. Debt levels continue to moderate. The net debt has further eased by more than 500 crores on a quarter-on-quarter basis, and the net debt to EBITDA stands at 1.4 times. So Tata Communications numbers look fairly steady. But for more stocks, let's go across to Sonal now. Sonal.
Good morning, Rima. Well, I have a couple of numbers on my radar. Watching out for Oracle Financial Software Services, where the numbers look good. Revenues went up by 10% on a quarter-on-quarter basis. They were up 0.3% on a YOY basis at 1,400 crore rupees. EBITDA margins also expanded on a quarter-on-quarter basis to come in at 46%, and profits also went up by 491 crore rupees. And the growth was lower because of higher taxes. Mastech, expecting a red tick on the stock, management said that it was a challenging quarter which was impacted by pause of a key program in a large account, currency impact, slower than expected ramp-ups, and delayed decision-making on few deals. So revenues went down by 2%, profits down by 3.5%, and EBITDA margins came in at 19.75%. CEAT is the other bummer this time around because there is a massive reduction in margins and profits as well. Revenues went up by 48%, but EBITDA is flat. Margins have declined by almost 300 basis points, leading to a profit decline of 74%. Raw material costs have gone up by 60%. Now, Hindalco will also be in focus because Alcoa reported numbers yesterday. Stock went up by 6% post-results, also because of buyback announcement. However, quarter-on-quarter numbers did see a decline, but YOY it's a massive increase because of positive metal cycle. Revenues went up by 10.5%, EBITDA declined 15% sequentially, margins did take a hit, and profits also declined 14%. However, it's the buyback announcement of around $500 million which kept the stock afloat.
Sonal, thank you very much for that. A quick recap then of the top stocks to watch this Thursday morning. Stocks with positive news flow are IndusInd Bank, AU Small Finance, Oracle Financial Services, Tata Communications and Hindalco, while stocks with negative news flow are Wipro, Havells, Gland Pharma, Mastech and CEAT. Let's move on and get a roundup of all the action from the commodities market overnight. Manisha Gupta joins in as always. Manisha, hi.
Hi, morning. And, some good news perhaps for the equity markets as the crude prices have seen a bit of a decline. But here as well, you have seen a bit of a divergence. It's 3% down for the U.S. crude prices, and the Brent is just about trading quite flat right now. But the Brent, remember, has gained nearly 8% in last three trading sessions, so some consolidation coming in there. But the reason for a 3% cut in the Asian markets right now for the U.S. crude is that you have seen, while the U.S. crude stockpiles declining, but the U.S. gas inventories have seen a rise of 3.5 million barrels. That tells you that the U.S. gas demand during the peak summer driving season clearly seems to be falling, with the gas prices near record highs. Also, there are reports on how Libya has resumed production at several oil fields where they had declared a force majeure. That brings some supplies back into the market. And then it is also about the trading activity itself. If you look at the NYMEX trade open interest, that is at the lowest since September 2015, telling you that there are a lot of jitters, people waiting on the sidelines ahead of the U.S. Fed meeting announcement. So yes, this is a bit of a slack coming in for the trade.
All right. Manisha, thank you very much for that. I mean, commodities in focus, it's an integral piece of the puzzle, which of course is not really signaling, or at least providing very clear signals.